So something I noticed was there's a ton of content about covered calls on the internet, but there's virtually nobody talking about when to actually pull the trigger on a trade. What do we actually have to see on the chart before we decide to buy shares or sell our covered calls on them? So my goal with this video and the next video as well is to give a really solid introduction into how we actually use technical analysis when trading covered calls. And I show some actual trades that went out to my investing community so that I'm not just talking about charts in hindsight. Enjoy the video. All right, I just wanted to do a quick video to talk about the power of price action and how I use price action and support levels to sort of time my selling of covered calls on the IBIT ETF. And for that, of course, we're going to use the BTC USD price chart. Sort of 95% of the time, what ends up happening is after the price is in a downtrend or a consolidation, there's some sort of smaller consolidation before the price continues. So I want to show you exactly what I mean by that. So before this big move up, when was the last point at which the price changed direction? In other words, where was the last low before the price took off again? And that low was right here. Okay, price was making lower lows. And what happened? Did price just take off? Well, if you zoom out enough, it kind of does look or seem like the price just took off. But there were 2 weeks here where the price consolidated. Okay, I really want to emphasize that. The price rarely just takes off after a large retracement or significant consolidation. So what we would be looking for is some sort of sideways consolidation followed by a breakout in the price. We basically want a repeat of this right here. All right, I just wanted to hijack my own video for a moment. It's actually been a couple weeks since I recorded this instructional video, so let me actually show you how I applied this concept to actual live trades that went out to my subscribers on my Ko-Fi platform. What happened was we actually got the kind of consolidation that I look for, and I said that although the setup wasn't ideal, there was enough bullish evidence to start building a covered call position in the Bitcoin ETF IBIT. Fast forward about a week to July 7th, and I posted again with yet another upgrade on Bitcoin, adding more to my position. Why? Because it extended its consolidation, and I made it very clear that the longer the consolidation lasts at resistance without pulling back, the more bullish Bitcoin's prospects become. And 2 days after that, I put out yet another post upgrading and adding to my BTC covered calls even more, because at that point, not only had the consolidation lasted more than a full 2 weeks, but it was also followed by a breakout above a previous high. The concept here is very simple. As the price of any stock or ETF approaches a resistance level or an area where we might expect a pullback, but instead of getting a pullback, the volatility contracts and it starts putting in higher highs and higher lows on smaller time frames, that combination indicates bullish pressure, and that's exactly what happened recently in Bitcoin, and we made an absolute killing trading this very price action this year. All right, now back to the video. And the retracement could also be deeper than that. In other words, we might see a higher low be put in, followed by sort of this larger VCP pattern before price breaks out again. So when you sort of start to understand how price behaves, it makes it a lot easier to avoid FOMO. So let's find sort of the last place where, even before this low, where the price turned around after a bearish or sideways consolidation. And that was basically all the way through the second half of 2024. So where was the last low of this consolidation? It was right over here. This was the last low before price really took off. But once again, price did not just turn on a dime and go up. Okay, a lot of people have this misconception about Bitcoin, but like almost any major security, you're just not going to see that happen. This actually took several months to turn around. It put in a higher low, it made a higher high, it broke above this level, people FOMO'd in, And then not only did it do one move down to take out the retail crowd, but it did two. Okay, it did an ABCD pattern just to make sure they got all that juicy retail FOMO money in there before it really took off. And look at that, even after this breakout, retail FOMO's in, they knock people out. Look at that, we had almost 2 weeks of nothing but down, and that's enough to disillusion a lot of the retail crowd. So far we talked about major support levels as well as price action. So another point that I want, or another tool in my arsenal that I use for timing my covered calls, is the power of the 100% fib extension. So for basically every major security, price tends to reproduce moves it has recently made. Okay, so here's what I mean by that. The market has an incredible memory for recent price moves, and it tends to replicate them. And that happens both on the upside and also on the downside. So for example, on this big up move that we had over here, this first impulse move that we had from the bottom that started this up move was reproduced 1, 2, 3, 4 times. So in other words, we had this up move, consolidation, and then if we just take that same line and bring it over here, we basically had that same up move, consolidation, same exact up move, consolidation, same exact up move. And it's even true for moves down, for legs lower in the market, even during consolidations. So we had this move from here to here, and that was replicated perfectly on the second swing lower. And as you can see, as soon as the price replicated the previous down swing, price stopped on a dime and retraced up. It stopped on a dime even before it reached the support level. So that really shows you the extent or the utility of the 100% fib extension. And as you can see, the lines I already had on this chart, this was the pullback from this first move lower, and it was replicated pretty much 1-to-1. So, and now we're getting this doji, okay? So there's a really good chance we're gonna have some sort of pullback or a sideways consolidation. And of course, the most powerful sort of signal is when you have several of these factors overlapping. So for example, if this move lower gets duplicated again, right, 1, 2, 3, that corresponds exactly with this monster support level. So if we do get that move, which I'm really hoping for, at that point, I'm going to have a big boy position in Bitcoin. Okay, now with that out of the way, I just want to touch really briefly on how we go about timing covered calls on our Bitcoin position, because I talked about the technical analysis, and most of you can probably put those factors together, but I just want to drive the point home. So when it comes to selling covered calls on your underlying Bitcoin, here's sort of the most important takeaway. If price is at a point of an extremely strong support level, right, using the factors we just talked about, at those instances, so let's say price moves all the way to 95,000, at these points, we want to be more reluctant to sell covered calls on our Bitcoin. And I know I'm the covered calls guy, okay? I love covered calls, but when we have sort of the optimal setup, what I like to do is I want to hold off on selling covered calls, okay? I don't want to cap my upside. If I have a lot of conviction on my position, on my entry, I want to hold off on selling covered calls until some point later. So for example, if price makes it all the way down here, I'm going to be expecting at minimum, this pullback to be replicated, the same move that happened here and here. I'm expecting that move to happen again. And after that move transpires, at that point, once we're here, this is where I'll be selling my covered calls, okay? And I'm gonna be selling at the money covered calls for the maximum premium, okay? Not only is it the maximum premium, but it's the maximum protection, okay? When you sell at the money covered calls, you get the largest buffer. You get the largest sort of break-even guardrails for your trade, right? That premium is gonna cushion any further losses in the underlying. Okay, it's not going to guarantee that you won't lose money, but you will be cushioning any potential downside after that point. So basically where we are right now in the price, this is actually a good place to sell covered calls because we completed this pullback. Price is still technically speaking in a downtrend. So I'm looking to be more aggressive with selling covered calls on my position. Anyway, I hope that helps. Make sure to send me any questions. You may be seeing this video weeks or months from when I recorded it, just depending on when you see it. Either way, please ask any questions. Even if it's not relevant to the current price action in Bitcoin, it could still be relevant to your learning.